Hey guys, this is Tripp with Blockcast News. Happy to be here today, March 3rd, 2023, to bring you 3 trending articles that I feel are important to keep your eye on. Let's get straight to it. The first article I'm going to show you is Bitcoin bull Michael Saylor loses bid to dismiss tax evasion lawsuit. Michael Saylor, MicroStrategy's co-founder and executive chairman, has lost a bid to dismiss lawsuits alleging he failed to pay income tax during his 10-year residency in Washington, D.C. The Superior Court of the District of Columbia ruled against the co-founder and executive chairman, known for being the largest corporate buyer of Bitcoin, late last month, according to a SEC filing on Wednesday. The unresolved tax issue could raise further concerns for MicroStrategy and its shareholders, as the outcome of the case may have ramifications on the company's reputation and financial stability. MicroStrategy stock traded 2% lower on Thursday to $252.89, NASDAQ exchange data shows. A separate claim brought against Saylor and MicroStrategy, accusing the company and its executive chairman of conspiring to violate the district's False Claim Act, has been dismissed. Saylor stands accused of evading over $25 million by the Attorney General's office, which is seeking damages, civil penalties, back taxes, and fees. Saylor and MicroStrategy did not immediately respond to Blockworth's request for a comment. Late August, the District of Columbia sued Saylor and his company, alleging that he had not paid any income tax in the district for over 10 years and that MicroStrategy had conspired to help him do so. The recent court ruling has serious implications for Saylor, who has been a vocal supporter of Bitcoin and made headlines for his large investments through the last 3 years. In 2020, the company announced that it had bought $425 million worth of Bitcoin to hold as a reserve asset on its balance sheet, and has since added to that position as of March 2023. MicroStrategy held over 132,500 Bitcoin, worth some $2.96 billion. Saylor stepped down from his long-running role as MicroStrategy's chief executive on August 3rd of late last year, becoming the company's executive chairman, a move that allowed him to focus more on the firm's Bitcoin acquisition strategy. Saylor has served as the CEO and chairman of MicroStrategy's board since founding the company in 1989 and took it public in 1998. So that's some interesting news, you guys. It could have a fair amount of implications, but as this shows, he does have all that Bitcoin. Is he going to use some of it to pay the fees? And I think if they backed it with more Bitcoin just recently, I would assume they have the money to pay the tax evasion if they needed to, but I'm sure there is lawyers that are involved in this case that will fight this out in court, and we'll see what ends up happening with that. My next article is on NFT platforms. So NFT upstart Blur outstrips OpenSea in creator royalty payments. As of last month, up-and-coming NFT marketplace Blur began paying more royalties to creators who sell artworks on its platform than OpenSea, the NFT marketplace's previous biggest hitter. There are currently more artists being paid royalties via Blur, and the platform is also surpassing OpenSea in trading volume. Blur made a staggering $424 million in sales last week, while OpenSea made only $92 million. The sudden surge of royalty payments from Blur follows a new policy issued by the company that states creators are to delist their NFTs from OpenSea in order to get full royalty payments on Blur. The platform's move to steal creators from its main competitor is part of the battle of fees among exchanges. Initially, Blur also allowed a 0.5 minimum royalty fee as part of its effort to reduce users' cost to zero. Its no-fee policy also prompted OpenSea to temporarily remove selling fees for many of its sales. Traders and NFT creators have flocked to Blur since it was launched in January this year, mainly for the airdrop of its Blur token. Blur token launched at $5, and despite the fact it collapsed 85% in a couple of hours, promises of another future airdrop incentivized inorganic trading activity on the exchange. In fact, it did So to such an extent that some collections like Bored Ape saw inflated floor prices compared to their listing on other exchanges. The Blur bid also grew exponentially as bidders were also eligible for airdrop tokens. Blur users on Twitter laughed off claims that rewarding traders with Blur for trading on the exchange does not incentivize flipping. As the case with many other airdrop tokens, when they see a drop in price, famed Blur is being sold off. There is also being criticism of the fact that a small number of holders possess a very large concentration of the tokens, although it must be noted that it couldn't be confirmed if these statistics also include wallets owned by exchanges. Blur has so far won a very unexpected battle against the world's biggest NFT marketplace. However, its aggressive tactics regarding royalty payments are nothing new from publishing and culture industry perspectives. Whether it's Amazon squeezing book publishers or Google efforts to disrupt the press industry, aggressive extracting value from content creators is common throughout the Web 2, and as Web 3 dawns, Blur is forging the same extractive type of relationship with creators. My question, though, you guys, is this right? We're talking about Web 3 versus Web 2 and how different we are and how we're towards people that are wanting to not be ruled by corporations. Blur is acting like a corporation. It's attacking the other corporation, creating a monopoly, which in the end, is this a good thing to do in a Web3 environment? I think it's basically breaking the idea of what Web3 is about, and I'm interested to see the implications and what will come of it. The next article comes from our own Andy Lin, and I will share it right now. Bitcoin's bullish run will continue in 2023. The following is a guest post from Andy Lin. Bitcoin is a digital currency that operates in a decentralized manner, meaning that it does not rely on a central authority or financial institution to operate. It was created in 2009 by an individual or group of individuals who used the pseudonym Satoshi Nakamoto. Bitcoin's unique features is that it uses blockchain technology, a distributed ledger that records all transactions in the network. One of the advantages of Bitcoin is that it provides a high degree of privacy and anonymity. Transactions are recorded on the blockchain and are visible to anyone, but the party's identity is not revealed. This has made Bitcoin a popular choice for people who want to keep their financial transactions private. Bitcoin has experienced significant price swings with periods of rapid growth followed by sharp declines. In late 2017, Bitcoin's price peaked at nearly $20,000, attracting significant media attention and mainstream interest. However, the bubble eventually burst and the price fell dramatically, leaving many investors with losses. Since then, Bitcoin prices have been on a roller coaster ride with significant price fluctuations happening over short periods. The cryptocurrency market is notoriously volatile, and the price of Bitcoin is no exception. In recent years, Bitcoin price has been influenced by several factors, including regulatory developments, adoption by institutional investors, and media coverage. The cryptocurrency market has experienced significant growth over the past years, with Bitcoin leading the way. According to CoinMarketCap, Bitcoin's market capitalization increased from $560 billion in January 2021 to over $1.2 trillion in March 2023. I believe the current state of the cryptocurrency market and its potential future performance is worth considering. Bitcoin has an impressive year-to-date performance with a 42% increase, but its price has also been volatile, with significant fluctuations happening over short periods. Bitcoin's price also has been volatile with significant price fluctuations, leading many investors to question whether the rally is over if Bitcoin's price will continue to rise. Several factors could impact Bitcoin's price in 2023. Andy Lin believes that one of the significant factors in the performance of US and Chinese stocks. As of March 2023, the US and Chinese stock markets exhibit different trends. The S&P 500, representing the top 500 US companies, has risen by around 3% year to date, while the Shanghai Composite, representing the top 300 Chinese companies, has risen 7.5%. However, the recent price signals from the US macro landscape warrant more caution in the short term. For instance, the recent spike in inflation and the US Federal Reserve tightening monetary policy could negatively affect the stock market and consequently Bitcoin's price. In my perspective, if either US or Chinese stock perform well, investing in Bitcoin could be attractive. Another factor that could positively affect Bitcoin's performance is the annual parliament session in China, which is scheduled to open on March 5th, 2023. The government will likely announce a growth target of 5 to 6% for the year, which could further boost the ongoing rally in Asian stocks. Additionally, Hong Kong has positioned itself as Asia's crypto hub, which may benefit Bitcoin's price. I also observed that Bitcoin and Nasdaq's correlation is trading near its lowest level since December 2021. This breakdown in correlation means that holding long crypto exposure may be more beneficial than holding US listed technology shares, which are more impacted by macroeconomic data. However, the recent price signals from the US macro landscape warrant more caution in the short term. In conclusion, I think that the various factors such as the performance of the US and Chinese stocks, policies in China and Hong Kong rise as Asia's crypto hub could influence Bitcoin's performance in 2023. I believe exercising caution and using stop level strategies to minimize potential losses when investing in the cryptocurrency market is essential. These are my opinions on the cryptocurrency market and its potential future performance. And honestly, I agree wholeheartedly with Andy with the pressure that everyone is feeling from Gary Gensler in the US. With Canada, we have this fight against exchanges as of late, and their listing processes are changing a lot. I think Asia is more open and innovative, from Hong Kong to Korea to Singapore to China. I think it's going to have a huge impact in the market. Even if the States isn't going to do as good as Asia, Asia will make up that difference, and I feel could impact Bitcoin for the positive. But thank you for listening today. I hope you had a wonderful day, and we're going to be bringing more of these to you in the near future, and I hope to have some guest speakers on here as well. I hope you have a wonderful day. Talk to you soon. Bye for now.